Hello traders, my name is Tomasz Wiśniewski and I'm Head of Research and Education at Axiory, and this is a short market video with the best trading occasions. Let's start. Coronavirus is no longer the biggest threat on the market. Well, maybe it is the biggest threat, but it's no longer big news. When you read financial news recently, you can see that the frequency of mentioning the coronavirus is less, is going down. Traders are getting bored with one certain information. They don't want to talk about this for a long time. Nothing major changed actually in the coronavirus outbreak, but financial markets get resistant over time to only one information. That is why we do have correction on risky assets, on indexes, emerging markets, currencies. We have a bullish correction on them, and on safe haven assets we do have a bearish correction. So safe havens started this week on the back foot. Today I have three long-term setups on the forex market for you, and this is a combination of risky currency and safe haven currency. Safe havens are yen, Swiss franc, and sometimes, depends from the situation, the American dollar. First instrument I brought you is a euro to Japanese yen. Here we do have a very handsome bearish long-term setup. This is a daily chart. The negative sentiment, the negative movement started from the bounce from this horizontal resistance. The price was inside of the trend continuation pattern, and this is a wedge. So it was more probable that the price will break the lower line of the wedge, and it happened. After the breakout, we have a small sideways trend, small rectangle, which is promoting the breakout to the movement to the downside. Very similar setup can be found on Australian dollar to Japanese yen. Here it also started from the bounce from this horizontal resistance. The price didn't create a wedge but created a flag. Those formations are similar and they are both promoting the breakout to the downside. It happened. As you can see, this breakout here is much stronger. It's just that Australian dollar is much weaker than euro. And today we can see the price trying to correct this movement, but the sentiment is definitely negative. And the last one is Canadian dollar to Swiss franc, so also less risky currency, safe haven, and risky currency, Canadian dollar. What we have here is a massive symmetric triangle pattern. This is a weekly chart. And last week we got crucial long-term trading signal here because the price decided, after a few weeks of drop, decided to eventually break the lower line of the symmetric triangle. In theory, that brings us legitimate long-term sell signal on the Canadian dollar to Swiss franc, and obviously, as always, we will see if this signal will be real or it will be just a false breakout, which, by the way, can also be an interesting trading opportunity in the opposite direction. Thank you very much for watching and all the best in your trading.